Well, every so often along comes the latest version of the South Sea bubble and there's a media frenzy over some stock market craziness or other. If you haven't heard about GameStop yet, don't worry, you will. As far as I can make out, it's a bizarre mixture of little guy versus Wall Street in a kind of reverse online pyramid scheme. To uncomplicate the madness for us is Sky's very own Adam Creighton. Adam, how are you, mates?
Well, thanks, Ron.
Great to see you, Adam. The hedge fund managers are losing billions and home traders are cleaning up. Has the world turned upside down or inside out?
Well, look, it is a really extraordinary story. I think it's part of a longer process of more and more retail traders getting involved in the market as costs fall over time. And yes, we've seen in the US on Wall Street, we've seen thousands and thousands of users, kind of small-time traders in a chat group called WallStreetBets, which is hosted by Reddit. They drove up the stock of GameStop, and just as you say, this has cost billions of dollars for massive hedge funds which had been shorting the stock in the hope that it would fall in price. But on the contrary, it's gone up over 1,000% in just a few days.
James?
What these hedge funds do and what they exist to do, as far as I understand it, they short stocks, which means they bet that those stocks will go down, that those shares will go down, and then they talk up the fact that they've taken a position. Is this, really a help to capitalism, or what sort of aid does this provide to the marketplace? How does this make sense to ordinary people?
Well, look, the conventional view is that short selling is good because it allows more views in the market about the direction of where the price should go, but certainly it is very controversial. Normally what it means is, so hedge funds, they borrow stocks from institutions, they sell the stock straight away, and they hope the price falls because they have to return the stock to the institution, so they have to go and buy it again. And so if the price is lower, then they make a profit. But of course, if the price goes up, they lose hugely, and that's what's happened in this case with GameStop. Look, it's legal in Australia, short selling. Something called naked short selling is not legal. That's when people sell stocks that they don't even actually have. They haven't even actually borrowed them. But nevertheless, in most capital markets, short selling is legal. It's normally a fairly small portion of the market. But as I say, retail investors, they don't really do it. They don't understand it. And the transaction costs involved, basically prohibit them from getting involved in short selling.
Rita?
Well, this shorting of stock with GameStop, 140% of the stock was shorted, so even more stock than actually exists. And this drives down the share price, destroys companies. It can make these hedge funds billions. But what good does it do? Does it create a single job? Does it create any value? It's having people actually question the merits of these processes. And what is the point? What possible benefit is there in allowing people to short stock?
Well, look, I do have sympathy with your argument, Rita, I must say. But as I say, the conventional view is that if you allow people to participate in the market who think a stock should be valued less, for whatever reason, for whatever fundamental reason, then you should let that happen. You shouldn't kind of artificially stop them from doing that. And only have one side of the market, the buy and hold side in, if you like. But certainly it does create a lot of turmoil, and there's no doubt that short sellers en masse, certainly not this time, but they can really destroy companies and kind of drive down their share prices. So there's a lively debate on both sides, but certainly this time I think we should all, at least some of us anyway, rejoice in the fact that the big end of town's really shot themselves in the foot and they've lost billions. I think two hedge funds in particular have lost $3 billion each, I think, in just the past few weeks. So that is just extraordinary.
Adam, I just want to play you this grab of former Securities and Exchange Commissioner Laura Unger comparing this frenzy, weirdly, to the January 6th Capitol Hill riots. Have a listen.
It really puts a lot of question about the integrity of the market, right? And it really kind of, everybody's scratching their heads over this. What should happen? What is the right thing to do to control this or stop this? Not unlike what we saw on January 6th at the Capitol, right? If you don't have the police in there at the right time, things go a little crazy. And that's kind of feels like what's happening with this. Much different, much lesser degree. It's financial harm, not personal bodily harm.
And Adam, there's this character called Keith Gill who's become a kind of legendary, I guess, Ned Kelly, Robin Hood type guy with his red bandana, I think he wears, and sunglasses. It's taken on, there he is, it's taken on a whole, rock and roll outlaw mentality. Is this people power versus big bad Wall Street?
Yeah, look, I think it is people power. I thought that comparison was just completely ridiculous. I mean, the fact is financial markets are massively skewed already in favour of the big end of town. You know, the professional traders, you know, they have much better access to information than ordinary people do. So it is already massively skewed to wealthy people. So I think, you know, this kind of one rare incident, you know, to be fair, is a good thing. So I don't think that there needs to be more police. And you know, the traders were furious with the trading platform, you know, somewhat amusingly named Robin Hood, which
yes,
you know, stopped on Thursday the trading of shares in GameStop, and of course infuriated its users. And I understand now that there's a movement to delete Robin Hood, so that trading platform, you know, may end up with a lot fewer users shortly.